All right, well, welcome everybody. I'm here with Dave Kalk. I am Tyler at Ross Real Estate, and I'll let Dave introduce
I'm Dave
himself.
Kalk, mortgage lender with Integrity Home Mortgage Corp.
So we've been longtime friends. We've worked professionally together for many, many years, and every now and again, you've probably grown accustomed to us having a conversation, kind of a little market recap about what's going on. We try to do it quarterly, I guess. Yeah, and there's all kinds of things going on, as you might expect. So, Dave, let's lead us off and just kind of ask generally, where have we been? How did we get here?
So as quickly as possible, let me point out that from 1990 to roughly 2000 in the U.S., we built about 12.5 million housing units nationwide. From 2001 to 2010, we built about 14.5 million housing units. And were it not for the 08-09 collapse, we surely would have built more. From 2011 to 2020, that fell off to about 6.5 million housing units.
Wow.
Then we get to the global pandemic known as COVID, and this causes global economic problem. And in the U.S., we even went as far as to basically put our economy into a, if you will, an kind of an artificial coma. Mm-hmm. What did this do to the building industry that was already struggling to get inventory back to where it was? We had the supply chain problems. We had skyrocketing costs of building material. We had labor shortages, people getting sick with COVID, etc. So while we were hoping to try and somehow get back on track with inventory, it didn't happen, and COVID was an even bigger impediment. So just kind of looking at Virginia, I was kind of looking at a couple of things today, and it said that in 2006, at the peak, in Virginia alone, we were tracking about 2.25 million housing units in 2006. And by 2009, we were at 490,000 housing units. So in Virginia, we kind of followed suit with everybody else. Freddie Mac just said a couple weeks ago that by their estimation, we're about 3.8 million housing units short of where we should be for normal supply. Now the NAR says that figure's closer to 5.5 million. So let's split the difference, 4.3 million. There's a pretty significant housing shortage. By my estimation, and I mentioned this to Grace earlier, this is classic economics 101, supply and demand issue. Agents have been crying about lack of inventory for a long time, and it is very, very real. The higher interest rates, of course, get all the headlines. Mm-hmm. Higher mortgage rates, what's that going to do? What gets overlooked is the fact that there are still far more people that qualify to buy a house and want to buy a house than there are houses to buy. And so this has been kind of that artificial, well, it's very real actually, safety net under housing prices, and why those folks that thought it might be a good idea to sit on their hands and wait for a price decline, it hasn't come. So that's kind of where we've come from in the last couple of decades and where we are right now. What are you seeing on your side of the street in terms of how all of this has affected both your buyers and your sellers, particularly in their willingness or unwillingness to give up some of the lower mortgage rates that they might have?
Yeah, gosh, there's so much information there. And Dave, I know you are really tracking the financing market and the interest rates, and that's really kind of a national level thing. As a local brokerage that really serves the Piedmont area, I'm more honed in on what's happening here locally versus nationally. Our office, mercifully, is disproportionately busy, so we almost kind of lose touch with the lack of inventory and the complaints associated with that. But we do see it clearly. There are 132 homes for sale presently in Fauquier County. I'm used to, over the last 15 years, seeing maybe 350 houses for sale at any given time. So it's a real thing. With respect to building, we are not seeing as many building starts so we are kind of a micro economy of the national economy that you went over with all that data. And of those 132 homes in Fauquier County, 41 of those are over $1 million, and some not insignificant portion of the balance, those 91, whatever the math is, balance, are to be built homes that have yet to break ground. So it's a real problem if you're looking for a house. But again, there are buyers in the market, and I think, like you touched on, trying to time the market, trying to wait for the interest rates to go down has only hurt people that have waited. The interest rates have really only gone up, and the Fed didn't help us by indicating they were going to do 3, 4, 5 cuts this year. Now they're talking about maybe one. Personally, I'd be surprised if they did any at all. And I've felt that way for months and months and months, looking at food, energy, transportation, clothing, and housing, those baseline needs that everybody has to contend with, no matter what socioeconomic bracket you're in, have been well above whatever the core PCE or the CPI inflation indexes have suggested of between 3 and 9%. You're looking more at your baseline needs of like 20, 25, 30%. So there's a market that feels like it's being bifurcated. People that are the haves and the have-nots. If you had an asset over the last 5 years, your asset has performed really well. Your house has skyrocketed in value. You probably locked in a really low interest rate, or you paid cash, or you can tolerate the cash flow associated with a high interest rate. Whereas those that waited or sat on the sideline really missed that big wealth building. I want to call it an opportunity. You can generally see opportunities. We didn't see this coming. We didn't know COVID was going to do that, and that we were going to have trillions injected into the economy. Long and short, things are moving like crazy. Buyers are finding difficulty buying houses, but the competition's not as steep as it has been. Not everybody and their brother's looking. It's still the people that have the ability and wherewithal to afford something are still out there actively looking. I may have gotten lost in answering your question.
No, well, so dovetailing on that, the buyers that I've worked with over the last 6 to 9 months, I pointed out whenever the conversation has come around to mortgage rates, be careful what you wish for, because, and I've pointed this out to a few people, instead of competing against 1 or 2 people to win that deal that you got, you would have been competing against 6 to 7 people if rates were 1% lower
or more.
So yes, it sucks that mortgage rates aren't where they were at their lows, but also that has forced a lot of people off the game board. And so your competition is not as fierce as it would otherwise have been or will be when rates do eventually find their way lower. So, my thing is always, if you can qualify and you can afford to buy a house, it's time to start building some equity on an outflow of cash that you would be making in the form of rent and building nothing.
Which has only gone up also.
And rents continue to go up. So if you can afford to buy a house, you should buy one.
Yeah, I couldn't agree more. Over the long term, the real estate market has always gone up in value. My opinion is the only reason to sell real estate is to buy more real estate. But there are, of course, ups and downs. Your house will be worth more or less at any given time. So if you're not compelled to sell a house at a particular time, you can withstand the ups and downs in the market, because over time it has, over history, only gone up.
It's funny you say that, because my wife and I are considerably older than you and Grace. And we have talked about the different houses that we owned over the years, because we're older, and every single house, like, God, I wish I'd kept that house. I wish I still had that. They're all worth a ton more than what they were when we sold them years ago. As you're building a family and you're upscaling to a bigger house, how great would it have been to still have that starter home down in Richmond that I bought for $60,000 as a rental property that probably would now sell for $475. Shoulda, coulda, woulda.
No, most definitely. Talking about the buyers again and competition out there in the market, it is definitely a challenge. So it's important for anybody that is looking in the market to buy something to be really with your game face on, to be totally prepared, ankles taped and, eye black under the eyes, like get out there to be game time, because those that are particularly first-time home buyers are kind of going up against a lot of people that have cash, and people that are in higher income brackets that can qualify for higher prices, that are planning in the future. I know you had used an example of, they qualified for $800, they want to spend $600 because they've got future expenses they're considering, like kids or, anything else that
around here that could be horses.
Or horses as well, yeah. There's definitely competition, so it behooves you to be incredibly prepared. This is not like a passive market to participate in where maybe you see it and maybe you like it and maybe you go look at it, maybe you make an offer. You have to be resolute in whatever it is that you're doing in this market. I'm still seeing multiple offers on properties, particularly in the 400 to 700 price range, and even over $1 million, which is over a third or nearly a third of what Fauquier County offers presently. Whether the interest rates go down or up, whether the value of the product, the real estate, the house, the land goes down or up, over time, it always goes up. And it's a wonderful hedge against inflation. All we've had in the last 5 years is inflation.
One last thing I would want you to touch on, and you spoke about it a little bit, the need to be well prepared right now is huge. I've got several buyers right now that are first-time home buyers that I'm working with that are asking all the right questions, having me run through all different scenarios, putting budgets together so that they are rock solid with what they can do and what they're comfortable doing. But from the agent's perspective, they're working with good agents that are telling them, explaining what escalation clauses are, explaining how aggressive they may need to be in order to win a deal. Could you just touch on the use of an escalation clause and why that might be something that every buyer would need to know about in this market?
Oh, yeah, absolutely. In the event that you are in a competitive situation making an offer on a property, this is Darce, by the way, he says hello. One of the tactical or strategic things that a savvy realtor understands is the escalation addendum. I will pay you X dollars, and if we get a competing offer against ours at X plus Y, we will escalate or increase our office price by some incremental amount. For example, I'm making a $100,000 offer on a house. I'm willing to pay $115,000, but only if somebody else makes an offer of say $105,000. I'll escalate mine to $107,000. Then you have a little bit of an advantage that that you've given it your best shot. So many buyers have been indoctrinated into this idea that, well, I want a deal, I want to make a negotiation, well, if you want the house, you got to pay what you got to act as though you want the house. So having a good realtor that understands the local market and understands different tactical approaches to winning and earning a ratified contract is only helpful. So we've gotten to where we were, we've gotten to where we are. What do you think about the direction we're going? Clearly, none of us know the answer. Otherwise, we'd be in Back to the Future.
Well, I think the Federal Reserve is met today, and of course, they didn't raise interest rates as expected, but they're no closer at this point to cutting rates. And one thing to be cognizant of is as we get closer to the election, the need to try and remain to maintain the perception of neutrality becomes greater. And so I think when you get really close to election time, I think the Fed's going to be more predisposed to do nothing. So with each passing meeting that there's no rate cut, it just keeps pushing a potential rate cut further and further down the road. So I think from where I stand, what I'm seeing is that buyers are now starting to recognize and realize that this is kind of the new norm, and that mortgage rates in the low sevens is, it's not the end of the world because I still qualify. Those that do, of course. It's obviously pushed a lot of people off the game board. That's kind of the new norm right now, and I don't see that changing significantly anytime soon. It'll be interesting to see as more and more data continues to come out. The Fed, of course, is watching the PCE, personal consumption expenditure, but they're also watching the job market. And so they're looking at the unemployment rate, and they're going to continue to look at any sort of signs of an increasing unemployment rate for the reason of just trying to put themselves in a position to be proactive with a rate cut. So for right now, we're not there. But I do see more people accepting that this is kind of the new norm. And if you want to get out of your mom's basement and buy a house, or you've just outgrown the one you have and you have to upsize, you need to talk to an expert and put yourself in a position to win.
Yeah, I completely agree. And if I was going to make decisions based on what I perceive the future to be, which I do as a real estate agent, as somebody that speculates and is interested, I can spin myself in circles arguing that things will go up or down, but I think ultimately we're going to see kind of a bifurcation in the market with respect to haves and have-nots. Like it's kind of always, they call it the Gini coefficient. I think that delta is getting larger and larger. And so if you don't have an asset, you can't keep up when things go up in value. If interest rates go down, I think the real estate market will go bananas again. I think just a point, half a point over the next year or two, I think real estate prices skyrocket. If the rates go up, which is very possible, as even though they're indicating a cut, I just don't see the real estate prices going down, particularly in the higher end.
There are far too many people that can still qualify to buy a house, and not owning a house versus owning a house. I mean, that's your baseline decision.
Yeah. Again, to dig into the bifurcation more, we're seeing a lot of people with really high credit card debt. We're seeing it's all-time highs, if I'm not mistaken. And then a lot of delinquencies with car loans, which the higher end market is less susceptible to those things, and the more affordable market is more susceptible to those things, which only builds that divide even more. I could spin myself in circles, but that's my perception of what we're seeing over the next year or two, and that's been my opinion.
Well, credit card debt is definitely an issue. We've seen a pretty significant uptick in refinances,
really,
and it is people doing cash out refinances to pay off credit card debt that they've accumulated, and that's with mortgage rates being significantly higher than they were a year ago. Still, 7 versus, I just got a credit card notification in the mail that said the rate was going up from 24 to 32.
Yeah.
Why would I want to have my 401k wouldn't do 30. It's just, you can't justify that. So over 1/3 of the recent mortgage applications were for refis. People doing debt consolidation.
Yeah.
No doubt.
Yeah, for sure. Well, that's, it's kind of Econ 101 again, is, pay off the most expensive interest rate debt.
Well, I think in closing, I would just say that it's always a good idea to work with an expert, a local expert, to try and put yourself in the best position to win. But things are so competitive now that I think I hate to say it, it's imperative to try and go it alone in this market. You need to know with your lender, you need to know, how high can I go? My agent is telling me I need to do an escalation clause. What the hell does that mean? And if I escalate, what does that hold for my payment? Those are things you want to know more than the day before you want to go out and look at a property. Get with a licensed lender sooner rather than later. Work all these things out, have your budget set up, and work with a local expert.
Yeah, and I know I didn't paint the rosiest of pictures for everybody out there, but if you do not own a house and you want to, don't stop at bad news. Go talk to the Daves, go talk to lenders and real estate agents. There's so many different loan products and so many different creative ways to get you into a house in a way that you can afford it, that it would really be to your advantage to exhaust those conversations to make sure that you're not missing an opportunity.
And you'll just be better informed in the process.
You either win or you learn.
That's right. All right, I'm Dave Kalk, mortgage lender with Integrity Home Mortgage, here with my buddy Tyler Ross at Ross Real Estate.
Thank you guys for listening.